Welcome guys to IB Acquisitions. In this video we're going to be going over a $10 million telehealth deal. And allow me just a moment so we could drop the link in the group chat. Okay. And see, I sent you a link on Messenger. If you could drop that in the group chat, and we should be good to go. So we're going to be discussing a $10 million telehealth deal we have. Alongside from that, we're also going to be discussing our new lead platform. It's called Lead Gen Assets. What is the reason and purpose of this platform? First of all, we're here to solve many shortfalls and shortcomings that brokerage firms have. Initially, it is about three that are the main. First one is lack of financial data. A lot of these business brokers do not present you really the facts of the business. As opposed, they present to you a pitch deck, so to speak, based on opinion, or they try to brush it up and make it look as best as they can. I mean, at the end of the day, it's their job to try to sell the business, but ultimately us as business buyers have to understand what are the risks involved. We honor and maintain transparency, meaning we're going to tell you what are the liabilities associated with the business, what are the shortfalls, the shortcomings, the mismanagement, the good, bad, and ugly, so to speak. Not only that, you're going to have full access to financial data. Another issue with business brokerage that you will not have to worry about with us is that business brokers are very biased, and they're not trying to structure a biz deal for you. They're trying to structure a biz deal for themselves. We are business buyers, so we're structuring it from the perspective of that. These deals are going to be pre-LOI if you want that option. If not, you will have a full set of financials, and we can assist with anything else you need. But we don't get involved in negotiations. We can assist if you'd like, but at the end of the day, you as a buyer are assuming responsibility, and because of that, we feel like you should have the options to decide what are the best terms for yourself. And the third big issue with business brokers is that the deals they have are really not fundable. How many business broker deals get funded? How many get acquired? Not many. As opposed with us, funding is a priority. So we not only do we have all the information and evaluation, but it makes it very easy for you to just get that data and take it to your investors. So let's showcase one deal that our sales team brought us, and we're going to be doing multiple throughout the week and the month for various industries and sectors. But before we get started, Nancy, any other points you'd like to make before we review this?
No, let's just keep going. Let's
Okay.
go.
So this is a telemedicine platform. It's a $10 million deal. We just received this one today, and it looks pretty good so far. So we're going to start with the front page. So you can see telemedicine platform. Second page, introduction, industry, healthcare, type, telemedicine. It's been about 12 years in business, and the competitors are Teladoc, Doctor on Demand, and Amwell, which are other telehealth companies. Background, and this is essentially what you should expect with a proper deal teaser. There's no lack of information. Matter of fact, it has plenty, as you can see. Background, the name, and the name of the company and the name of the business owner. Well, names that we're using here are generic names. These are not the actual names to ensure confidentiality. And there's a few tips or secrets, I'd rather say, about lead generation that we will be discussing that a lot of people really don't touch on, and this is where we're really making our bank in. So name is Med Connect Health Solutions, and the business owner for this situation, we're going to call her Dr. James Thompson. What is the growth? It started as a small local clinic, and over the years transitioned into a telemedicine platform, eventually expanding nationwide. What is the competitive advantage? They have a proprietary AI-driven medical symptom analysis and integration with Internet of Things health monitoring systems. And this is something you're going to find very common with our deals. A lot of our deals usually have either patents or proprietary systems. And this is a value add for investors. It's something that sets them apart from other businesses. What is the business technology? I mean, this is very innovative. Let me share this with you. So as for patents, they got a patent for an AI-driven medical symptom analysis algorithm. We'll explain what that means. Their proprietary software is a secure HIPAA-compliant telemedicine platform, allowing for video consultation, appointment scheduling, and electronic medical record management. Now, as opposed to other companies that use software that's out there in the public, that's made available, they have their own proprietary. I think that's a value add because especially when you're dealing with medical information where the HIPAA compliance comes into place, you want to ensure that there's security and confidentiality of data. And what better than you being the owner of that platform, you having the code and understanding how it really works and what's happening with the data, as opposed to leaving that in the hands of a third party. What is their system? They have an integration with wearable devices and Internet of Things health monitoring systems for remote patient monitoring. I mean, this is something that truly lacks in telehealth. Usually you speak with a doctor over your phone, iPad, laptop, whatnot. But there's a disconnect, right? It's mostly on an assumption-based system. Well, because they have wearable devices, the doctor can use that with their proprietary AI technology to analyze the symptoms you have. And then they could correlate that data and do more extensive analysis instead of assumptions. Now it's not just, oh, you have a headache, but we can narrow it down to why is that. To some degree, of course. Research and development, continuous research and development in AI-driven diagnostic tools and integration with emerging health technology. And this is something I do love about this company and the type of businesses we list, is that mature companies usually give up on R&D. They usually have their ways and they're just stationary, as opposed these businesses are always trying to improve, always looking for innovation. As we say, innovation is the key in any industry. What is evaluation? Well, on their end, they ran the valuation. We're going to run our own. But the combined valuation of the patent, proprietary software, and system is estimated to be $15 million. Ansi, any comments or questions on this section of business technology?
No, yeah. One thing is, I've dealt with a deal that had, as you know, IP associated with it. And when it comes to patents, you have to make sure when you value it, you see exactly how much revenue the patent alone has generated. Not just, oh, hey, this patent is attached to this business. These are the revenues, and it's kind of broad. You have to kind of like look independently at that patent and look at the revenue that it has produced over the last 3 years, if it has produced any. Because a lot of times the sellers, what they would do is say, hey, look, I have this patent and it has X amount of potential. And because of that, I want X amount.
Right.
And that's not really realistic. That is extremely, I don't know, it's kind of like a future driven type of thing
Right.
based on future performance, where if you don't have any data to go off, right, you as a buyer, you want to assume or you want to pay as little as possible, but the seller, they're going to want a inflated valuation. And, we've almost had a deal breaker because of that. So you want to be careful when you're looking at these, the patents and IP that's associated with these deals, and make sure you look at the revenue that it has produced independently of the business. Look at it separately and see how much it has produced. And you can take it from there as far as the valuation goes. But do not just give a blind valuation for these patents whatsoever.
Right. No, that's an excellent point. As you guys know, we always like to circle back to the cash flows, because what is a technology really worth if it isn't generating anything for a business, right? We can assume all day long. Moving on to the next section, cash flow generation. And here we have the patient base is going to be about 35,000 patients annually with an average revenue of $200 per patient. Now, I like this because it's not very concentrated. There's a diversity of patients. As for contracts, they got contracts with 20 companies generating a revenue of $1.5 million annually. Accounts receivable is about 2.2 million, and they have surprisingly a 95% collection rate. But I've seen a few telehealth deals, and it's mostly on a month-to-month basis. There's not really a lot of credit, so they're more than likely getting their money up front. As for insurance, they have 60% of revenue comes from Medicare and 40% from private insurance. lifetime value of patients. The average lifetime value of a patient is estimated at $1,200, and the patient retention is 70% of patients are repeat customers. This is the type of data we like. We like the in depth. What is the business really worth? What is it doing? What's its potential? And so on. I mean, you can speculate all day, but here are the facts. Ansi, I know you have some experience dealing with Medicare. Could you comment on that in regards to the Medicare and the complexity of it and the billing?
Yeah, so when it comes to this, you want to look at well, any business that any healthcare business that deals with billing, you want to make sure you look at whatever system they're using, and you have to get the information that's in that. Sometimes they would say, "Hey, look, Medicare bill 700, I'm sorry, reimbursed 700, 300." What you have to do is you have to get the specific code for that billing and look at their system and see how often they're billing. But not only that, but what is the exact number? They may say 700, they get reimbursed, but it's probably really, I don't know, 635, 670, something to that
Right,
effect. So you want to look at the billing software that they're using and get the data directly from there because it tells you how long they've been dealing with the patient, how long they saw the patient, right? How long that session lasted with that patient specifically. Medicare requires all of this information for them to reimburse you. So taking a look at the software, the data that's in that software is going to tell you exactly to be sent how much they get reimbursed and not just a general number that the seller is giving you. And
right.
in fact, like when it comes to that billing, the revenue, you're not going to be able to confirm anything accurately unless you look at that software.
Perfect. You heard that, guys. Next section, growth strategy. I think this is very important. Ultimately, how they generate the revenues and expect to generate revenues. What is revenue generation? Expansion of the telemedicine platform, targeting rural and underserved areas, and increasing partnership with large employers. Client acquisition, aggressive marketing campaigns, strategic partnerships with healthcare providers, and enhancing the platform's user experience. Account receivables, 2.2, again with a 95% collection rate, and sales, a dedicated sales team responsible for acquiring new contracts and maintaining relationships with existing clients. Now, I like this overall because they got marketing, they got a sales team. You know, they're reaching out to large companies and trying to structure those deals with their employees where they're offering these services to them, and their collection rate is pretty high. I mean, overall, in regards to the growth strategy, what's your opinion on it, Ansi? I think it's pretty solid.
Yeah. There's not much to chime in. It seems pretty solid on the service level, obviously, until we get more data, but
Right.
the service level is pretty solid.
So, breaking down the staffing information, I want to know exactly what the employees are, who they are, and what they're doing. And obviously, what is it worth? What's it costing me? So, we got about 45 employees, 20 that are doctors as telemedicine consultants, 10 nurses that are also telemedicine consultants. We got IT and software engineers, 8. These are platform development and maintenance. Administrative staff, 3 for scheduling, billing, and customer service. Sales team, about 4. Client acquisition and account management. And payroll expense is about 3.8 million annually. I mean, it looks good overall. In my opinion, I'd probably up the administrative just to ensure scheduling and billing is on point, maybe to 5 people, 6 people as opposed to 3. And the sales team, I'll double that. You know, we want to be a little more aggressive with sales, try to get more clients, contracts, but overall pretty good so far. Ansi, any comments?
Yeah, no, what you want to focus on is any kind of recruitment, like we talked about earlier. When it comes to staffing, that's going to always be your biggest challenge, trying to find great talent. So, just adding to that point that you made, you know what I mean?
Yeah,
Just make sure you, when it comes to the talent, the staffing, that you have really good people that's capable of keeping up with the demand.
right. Perfect. Next section, we got corporate governance. And I think this is extremely important because this is ultimately the structure of the company and who you're going to be dealing with. So again, these names are generic, but we have Dr. Jane Thompson that owns 60% equity and Dr. Mark Johnson who owns 40% equity. They're both joint strategic decision makers. Obviously, one has more equity than the other. Shareholders, it seems like there's no external shareholders. The business state location is California. Areas of servicing nationwide with a focus on rural and underserved communities. Nancy, what's your experience dealing with equity partners involved in a transaction?
In what regard?
In regards to negotiations, we have somebody here that has majority
On
equity.
the seller's part, right?
Correct. Yeah.
Yeah, no, I mean, it depends. I've dealt with a number of scenarios. Ultimately, it depends on what kind of relationship the seller has with that partner.
Mm,
Sometimes there's a silent partner who's really not involved. Maybe they gave capital to start the business, whatever the case is, or maybe they just stepped away. But usually, there's going to be someone who is in the business, running, operations that know about the business, and more so, the other partner is more of an absentee. We actually, one of the deals we have now, the seller had some situation going on where they got sued to stay in a partnership. So it depends on what kind of relationship the seller has, but you can't really make any final decision unless that other partner is there. That partner can absolutely stop the deal from happening if it's any kind of miscommunication, or if there's anything that's being hidden from that partner that they don't know about. So you have to make sure that you build a great relationship with the seller, and then bring that partner on. And any conversation that you're going to have, that partner should not be absent whatsoever. And if they are, just reschedule that meeting, because it is imperative for you to not only close on time, but making sure you do a good deal.
right. Nancy, do me a favor. Can you double check the stream and ensure that it is streaming the presentation as opposed to the video call?
No, you're good. It's the presentation, corporate governance.
Okay. Next section, liabilities. And this is the most important part, because truly this was going to make or break the deal. Uh, this is at a surface level. Again, this is word of mouth from the business owners. We have our sales team engage them as far as they can, and they'll be sending us documents for us to review. But in regards to as the surface level, we got inefficiencies. The business faces challenges in maintaining the telemedicine platform's performance during peak times, leading to occasional downtime. Financial problems, high operational costs due to continuous research and development and marketing efforts. Legal problems, none so far. Again, word of mouth. We will have to review that. And then again, we have poor management, and it seems like there's a difficulty in recruiting and retaining top talent, leading to occasional gaps in service quality. Ansi knows this. We've seen a trend with a difficulty in recruiting and retaining top talent throughout the industry. Can you touch on that, Ansi?
I mean, it's not really much to touch on. It's just things have slowly gotten back. I wouldn't even say gotten back, but things are slowly um, looking a little bit better in the workforce as far as staffing wise, with respect to finding talent. But there's still very much a shortage in that industry, and I'm not sure exactly when that's going to look up. So that's my input. I'm not really an expert on that, but just from my experience,
Perfect.
it's really hard getting great talent.
Okay, financial summary. So, MedConnect Health Solutions has experienced consistent revenue growth over a 3-year period from 2021 to 2023. The company's net income has also seen a significant increase, indicating that their growth strategy and expansion into telemedicine services have been successful. The company maintains a healthy gross profit margin and has managed to control operating expenses, leading to an increase in net income. MedConnect Health Solutions has also managed to reduce interest expenses over the years, which possibly positively impacts net income. And then finally, we have our financials, and these are just 4 metrics we like to put out for reference. We have our revenue, and the first chart is going to be 2021, second bar 2022, third bar, which is grayed out, is 2023 because it is a pro forma. And we got revenue, as you can see, pretty high. It's been going up steadily. COGS, gross profit, and then we got net income. So let's move on from here to the financials. And we got preliminary financials we were able to get We will be receiving the full set, but this is more than enough for us to do a business valuation on a preliminary level. So let me share this with you. As you can see, revenue was 8.4 million in 2021. We expect 10.7 in 2023. COGS, not bad, from 3.7 to 4.8, is obviously going to rise with revenue. Gross profit from 4.6 to 5.9, almost 6 million, which is great. Operating expenses, has risen, not too much really. Depreciation, amortization, but again, this is a more of a web-based type of business, so there's not going to be a lot of that. Interest expense, very little, so that means there's little debt on the books. Taxes, 178 in 2021 to 222 in 2023. Are you able to see my screen? Give me just a moment, guys.
It's on the deal presentation, not financials.
It's still on the presentation?
Yes.
Okay. How about now? Do you see it?
1 second. No.
Give me just a moment, guys. Let me know if you see. Comment below in the chat if you're able to see the financial data for the business. And see.
No, it's not coming up yet. Your screen comes up, not the financials.
Okay. How about now? Nothing? Okay, what I'm going to do is I'm going to put the presentation back. Give me just a moment. And I'll just read out to you the financial data. And then we'll drop a separate video going over financials. Because we do have a valuation on this business. Net income.
It's up right now.
2021 is 456, went up to 534 on 22. We expect 902 in 2023, which is going to be a great increase, almost doubling the net income. Net debt issued, they issued about $500,000 in 2021, but for the next 2 years, there hasn't really been any debt. We have been repaying 100,000 in 2021, 110 in 22, and 120 in 2023, which has led to that decrease in interest expense that circles back to our net income. Now, for the balance sheet, and again, you shouldn't be able to see these numbers. I don't know why the case is, but I will be telling them to you verbally. Balance sheet, we got our PP&E at $2.5 million for 2021, and we got 2.7 expected for 2023. So there has to be some substantial machinery or equipment. Current assets, about 1.8 million for 2021, has gone up to 2.3 million for 2023. Current liabilities only 1.2 in 2021, went up to 1.4 million in 2023. So there's that asset liability ratio is pretty good so far. Beginning net working capital 600,000 in 21, ending in 2023 with 865, and ending working capital 735, ending in 2023 at 1,015,000. So overall, the financials for this business are pretty stable. They seem pretty solid. What are your comments, Ansi, in regards to that?
Yeah. I mean, from I'm not able to see it, but from what we discussed on a surface level, of course, it's pretty stable. Obviously, we want to question the seller more about, in a scenario like this, we'd want to question the seller more, about some of the inner operations. That's what I like to see. And the management. What's the management of the business? Financials could be great, but if management isn't the best, well, if financials are good and management isn't the best, that's a company I definitely want to acquire. Right.
Absolutely.
So So yeah, it's not much that I want to add to it.
Right.
Besides what you already added.
And we're gonna cut this video short. Sadly, there was a technical difficulty. I wasn't able to show you the valuation side of it, but we will for the next following video alongside many other deals we have. But I really wanted to show you guys this format we have with Legion Assets, where we're showing you the liabilities, the corporate governance, the staffing information, the growth strategy, the cash flow generation, the business technology, the background, and of course the introductory of the business itself, which, I mean, have you seen this level of detail with business brokerage deals, Ansi? Just off the teaser alone.
No, not from brokerage firms. M&A firms, yeah, but definitely not brokerage firms for sure.
So, guys, I'm glad you were able to watch this. We're gonna follow up with a next video. This was more just like an introductory of what's to come. And Ansi, any closing remarks?
Not right now. Let's save that for the next video.
Okay,
So we have a better presentation.
perfect. So catch us on the next video, guys.